Credit card executives got absolutely shredded during a Senate Judiciary Committee hearing, courtesy of our friend Josh Hawley, who just won re-election in the great state of Missouri. He was lacing into them and posted a clip of this and a longer clip about his conversations with the people there, saying that average credit card interest rates are near 30%, calling it a total ripoff, saying Congress should cap these things, and that Trump has already endorsed a credit card cap, so let's get it done. Now, he shared a short clip. I want to play a longer clip for us here today. But first, I want to explain who was there. This is what it looked like from the official website, saying that they were there, full committee, Senate's in session, Democrats still currently in charge for the time being. But this is what they were there doing: breaking the Visa-Mastercard duopoly, right there, a monopoly. They control everything between the two of them, bringing competition and lower fees to the rest of us. And so the hearing was there. It was a full 2 hours. Josh Hawley definitely had the clip of the day. But these people were there. Linda Kirkpatrick, president of MasterCard, president of the Americas, MasterCard. Bill Sheedy was there, senior advisor to the CEO for Visa. He's coming in from San Francisco. And then there were other people, the National Association of Convenience Stores, right? They're all kind of forced to use these companies and their services, or else there are penalties and repercussions that come their way. This is Battenkill Books, co-owner of this bookstore, probably paying out the nose in service fees, and a University of Law professor from Notre Dame. So Josh Hawley was there. Here's a full exchange with Hawley, senator, versus these two. This is Mr. Bill Sheedy and Miss Linda Kirkpatrick, both from MasterCard and Visa, respectively. And so here's what it sounded like on the floor of the Senate.
Thank you, Mr. Chairman. Just on that point about Visa and MasterCard being successful businesses, I think you figured it out, haven't you? I mean, what's your profit margin, Ms. Kirkpatrick?
It's circa 50%.
Oof.
Mr. Sheedy?
Slightly higher.
Higher than 50% profit margin?
Slightly higher than MasterCard, yes.
Yeah, that's incredible.
Over 50%
profit margin. I mean, that's absolutely unbelievable. What's the answer to the Walmart question, by the way, that Senator Welch posed to you? What's Walmart's interchange fee that you negotiate with them?
I don't have it with me today.
You don't have any idea whatsoever? Is it higher or lower than 2.5%?
In other words, does Walmart get a better rate than the bookstore owner? The mom and pop store who's just trying to sell you goods and services, do they pay a higher rate than your big best friends do?
Walmart negotiates their rates based on the business that they do with us.
Meaning they're big, they're really big, they're gigantic, so they get a better deal than Mr. Callahan or most small businesses in Missouri. Is that what you're telling me?
Yeah, Senator, we have volume discounts that we offer to some merchants. I suspect Walmart is one of them, and I don't believe that it's commercially unreasonable to get an arrangement where, in exchange for more volume, a merchant can qualify for lower rates.
Well, I'm sure it's not commercially unreasonable for Walmart, or certainly it's in their financial interest and in yours, but I doubt it's in Mr. Callahan's financial interest. And my question to you, Mr. Callahan, is when you've got Walmart and other major competitors getting charged much less than you are, why in the world would you stick with these guys? I mean, why is it that small businesses continue to use Visa and MasterCard?
Where is he going to go?
When you're getting charged so much more?
In my opinion, it's a matter of convenience for the customer, and customers matter to our business.
Maybe is it because that Visa and MasterCard are effectively monopolies? They control 80% of the market?
Certainly part of the
80% of the market? I'm just having a hard time understanding, Mr. Sheedy and Ms. Kirkpatrick, you have a business model, you're making over 50% profit margin.
Nice
You
business.
are able to give the shaft to small businesses. Estimated cost to Missouri businesses from these fees is $1.5 billion. That's with a B, $1 billion a year. Why aren't all of these businesses running away from this model? Because they don't have a choice, because you control so much of the market.
People have MasterCards and Visas. You got to take it.
Classic monopolistic behavior, and yet your testimony here today is you don't want any competition. You have 80% of the market, but you don't want any more competition. I'm having a hard time finding that position defensible, let alone sympathetic. I mean, it's unbelievable the amount of money that you're making. It's unbelievable what you're charging small businesses and consumers, and yet your testimony is, please, we can't possibly have any competition. I mean, let's talk about what you're doing to consumers who hold your cards. Last year, as I understand it, there were 726 million Visa and MasterCard issued in the United States. That's about 2 for every 1 person
flood the market, flood the zone with their cards.
How much debt is owed on your networks, Ms. Kirkpatrick?
We're not the bank, so we don't have visibility into that information. We also don't generate revenue from interchange.
Okay, you have no idea. Mr. Sheedy, do you know?
I don't know.
Well, let me help you out. Let's have a look.
Let's go to the charts.
It's $1.17 trillion.
Trillion? That's a T.
$1.17 trillion is what consumers now owe on your credit card networks. Do either of you know what the average interest rate is on your networks, Mr. Kirkpatrick?
Oh, Senator, we're not the bank. We don't set the interchange.
I know,
we don't
but
set
you
the
benefit
rates.
from it, and you know. Do you know what it is? This is your business model.
We
Do you
don't.
know?
We don't collect
Do you know,
revenue
Mr.
from
Mr.
interest
Sheedy,
rates.
do you know?
I don't, Senator.
Do either of you read the newspaper? Forbes magazine just estimated last week that the average credit card APR in your networks is 28.75%. Average. 29%, let's call it.
can round up.
29%. It's nearly doubled in the last 4 years. That is astounding. Absolutely astounding. And you just testified a second ago that you've got more than 50% profit margin, and yet your testimony here today is you can't possibly survive if there's any competition. How can that be true? How can that be true?
They
You've
need
got
their
debt like we've never
trillions and
seen
billions.
before in American history. Your profit margins are as high or higher than they've ever been. You have 80% of the relevant market in the credit card interchange fees that we're talking about, and yet you couldn't survive if there's any competition? What am I missing?
Good question, Josh. I think you're missing the fact that they want their billions of dollars for themselves. They don't want to allow other people to come in and introduce new mechanisms. And Josh Hawley also had another exchange where he was explaining that competitors like Stripe or Apple Pay aren't allowed to access the markets because they force you out. They don't want crypto. They don't want competing parallel systems to come in and take their business.
Consistently in the last few years, you've raised them. Even as your network has expanded, even as your profit margins have gone up, you've raised the swipe fees. And in terms of competition, you are paying competitors not to enter the market. The DOJ lawsuit says that you threaten retailers with staggering financial penalties. That's a quote, staggering financial penalties if they use a competitor, and you're paying Apple and Square and others not to compete in your market. You've got 80% market share, and you are paying off would-be competitors not to come into the market while you charge people like Mr. Callahan, who knows how much more than big entities like Walmart.
Maybe subsidizing
This
all
is
the
just
small
classic
businesses.
collusive monopoly behavior. And your testimony is you can't accept any more competition. I agree with one thing that my colleagues down the dais have said, which is that this is not a sustainable situation. It is not sustainable. This has to change. 1.17 trillion in debt. This has to change. And I'll just end with this, Mr. Chairman. I thought one of the best proposals that the President-elect Trump made during his last campaign was to cap the interest rates of credit cards. So we could do that. We could do this and that. I think it's a great idea.
Yeah, maybe you should.
I don't know why 30%, 30% interest rate should be charged on debt like this. I don't understand it. And I don't understand why you won't accept the smallest modicum of competition when it comes to these retailer fees. And I'm just here to tell you, this will not stand. Thank you, Mr. Chairman.
Great job, Senator Josh Hawley. Glad he's going to still be in the Senate on the Judiciary Committee, telling those people the truth that what they have now is a grift. They've got a duopoly. They have a bunch of politicians who are bought off, right? They donate back to the government that allows their grift to continue. They get all their big buddies bought in on it. The Walmarts, if there's new competitors like Apple Pay, or if you want to introduce an alternative payment system, everybody freaks out. You get people like Elizabeth Warren and others coming down trying to nip those in the bud. Don't want those to bloom and blossom so that this corrupt grift can continue. And Josh Hawley's calling it out. But now that we know how bad our financial system is, I want to tell you about a company doing some interesting things in the decentralized finance space, or the DeFi space. We know President Trump just won the election, and immediately afterwards, we saw Bitcoin cross 90K. Now, President Trump hasn't rolled out his plan for crypto, the Fed, or even finished with his appointments yet, but the financial world is evolving nonetheless. And at the center of this transformation is crypto. And the company that's leading the charge in this space is called DeFi Technologies. As a publicly listed entity, DeFi Technologies bridges the gap between traditional finance, or TradFi, and decentralized finance, known as DeFi. By offering secure, regulated access to a wide range of digital assets and blockchain-based innovations, the company is paving the way for investors to participate in the next evolution of finance. Let's dive deeper into what makes DeFi Technologies a great player. At its core, DeFi Technologies enables traditional investors to tap into the digital asset revolution, and they do this through ETPs, or exchange-traded products. What are ETPs? There's so many acronyms these days, but it's pretty simple. ETPs are financial instruments that track the value of digital assets like Bitcoin, Ethereum, or emerging Web3 protocols you may have heard of. ETPs allow investors to gain exposure to these assets without directly purchasing or managing them, offering the simplicity of trading on regulated stock exchanges. With over 20 listed ETPs, DeFi Technologies makes investing in digital assets as accessible as buying stocks. A key subsidiary called Valor Inc. has been a trailblazer in the European market. Valor launched the world's first fee-free Bitcoin and Ethereum ETPs and now manages hundreds of millions in assets under management. Valor's unique business model combines low management fees with high-yield strategies like staking and lending, generating returns of 7 to 8% on assets. With assets under management reaching up to $800 million, this subsidiary alone drives substantial value for DeFi Technologies. And DeFi doesn't just stop at ETPs. Its diversified business includes DeFi Alpha, which is a cutting-edge arbitrage trading desk that has already generated $96.7 million in 2024 alone. Stillman Digital, which is a financial services firm specializing in OTC trading, custody, and market making. And Reflexivity Research, co-founded by Anthony Pompliano, delivering expert insights into digital asset trends for institutional investors. This multi-pronged approach positions DeFi Technologies as a leader in multiple high-growth areas of the digital asset ecosystem. And behind this innovation is a visionary team of industry pioneers. CEO Olivier Roussy-Newton, who previously founded Hive Blockchain, leads a team that includes Jordan Wattenstrom, the founder of the world's first Bitcoin ETP, and Anthony Pompliano, one of the most recognized figures in the crypto space. With decades of combined experience, this team is strategically steering DeFi Technologies to new heights. The company's growth story doesn't end there, though. DeFi Technologies is expanding into new markets, including the Middle East, where they opened an office in a region that is fast becoming a new global financial hub, in Africa, in partnership with the Nairobi Securities Exchange, and in Asia, with advanced discussions in Japan, Korea, and Hong Kong. And with plans to list on the NASDAQ underway, DeFi Technologies is positioning itself as a global powerhouse in decentralized finance, and their numbers speak for themselves. In 2024, DeFi Technologies reported over $593 million in assets under management, $141.5 million in forecasted revenue for the year, and a strong balance sheet with negligible debt and significant cash reserves. Despite this robust financial performance, the company is trading at a P/E ratio below 10, making it highly undervalued when compared to its peers. But DeFi Technologies isn't just about profit, it's also about purpose. The climate change people still control a lot of the regulatory environment around the world, and so DeFi Technologies is playing along. They're committed to sustainability through initiatives like its carbon-neutral Bitcoin ETP, which offsets the environmental impact of Bitcoin by funding certified carbon removal projects. What sets DeFi Technologies apart is its ability to innovate and collaborate. The company has forged partnerships with major players like Bitcoin Suisse, Coinbase Cloud, and Zero Computing, leveraging their expertise to enhance its staking, trading, and infrastructure capabilities. These strategic alliances enable DeFi Technologies to stay ahead of the curve in a rapidly evolving industry. Simply put, DeFi Technologies and their technology are changing the game. With a diversified business model, visionary leadership, strong financial performance, and a commitment to sustainability, DeFi Technologies is uniquely positioned to lead the decentralized finance revolution. If you're looking to invest in a company with strong brand recognition, guided by the best minds in crypto, built on a solid principle of financial freedom, while being massively undervalued, DeFi Technologies might be for you. Do your research, click the link below to learn more about DeFi Technologies today.